build wealth as a doctor or a dentist or a busy professional when you have zero time or when you have zero knowledge on how to invest, right? Like we don't know the intricacies about doing proper research to invest in the stock market or the jargon of real estate investing. And why should we, right? We're doctors. Mm-hmm. This is not what the focus of our professional programs are. Now, if you're watching this, you're probably a pretty entrepreneurial doctor, right? You take your time to treat your patients. You take your time to make patients confident about their smile and help them achieve optimal health. You keep focusing on expanding your business as well as the services you provide in your business in the form of continued education, conferences, of hiring consultants. So when do you have the time to invest your money properly, right? So when inflation hits you, you have a hedge of protection. So when income taxes hit you, you have a hedge of protection. When recession hits you, you're protected. When an emergency hits your family or you or your business, your bank account is still protected. This is exactly what we're going to be talking about today, right? We're going to be talking about the value of apartment building investing and how investing in multifamily real estate will make you wealthy, right? Multifamily real estate will protect your family for generations. I want you to just take a minute and imagine yourself in a year or two from now, and your money is protected from taxes, it's protected from inflation, it's protected from recessions, and the money that's sitting in your bank account or in the stock market will actually be making money for you day in, day out with no days off. How many people in here want to experience that? Let me hear from you in the comments section right now. Like, can we get a thumbs up? Like, I want to have an interactive kind of session here today. All right, guys, we're going to introduce ourselves. What's up, everybody? My name is Dr. Jonny Walker, or Jonathan Withanachchi, and I am honored to be in this Facebook group started by Dr. Noel Liu and filled with such high-quality professionals. I was equally honored to be invited to be admin on this group. I'm an endodontist by trade, and I've been very successful in multifamily real estate investing arena, and I'm the founder and principal of a capital firm called Walk of Wealth, which has successfully invested across 650 units and over $90 million in transactional volume. I have a YouTube channel, I have a website, an Instagram, as well as a private Facebook group, all dedicated to educating people on the principles of multifamily real estate. You could go to walkofwealth.com/Jonny, Jonny. Again, it's Walk of Wealth, WALK of wealth.com/Jonny. You can follow me everywhere on the web. We have a great show today. Our co-hosts are Dr. Noel Liu and Mr. Thomas Varghese. Both are serial entrepreneurs and very successful at what they do. Dr. Noel, Thomas, and myself, we're going to have a conversation on how to get started in multifamily real estate. And I believe that it's going to make some people on this live a lot richer and therefore a lot happier. Dr. Noel, welcome to our first official live stream. Tell us a little bit about who you are and how you got started in the multifamily real estate investing arena.
Oh, man, thanks a lot, man. I love it. This is live. First time I'm doing it, and I am enjoying it. So my name is Dr. Noel Liu here. Some of you guys know me, in this chat here, and some of you guys know me in the group. And those of you who don't know me, I own a very successful business. My wife and myself, we have about 11 locations owning secure dental. And, we are every single day we are scaling, and we're just killing it. Alongside with a team of doctors as well as, our team members. There's no such thing as, one thing I've learned in business is there's no such thing as, I and me. It's all a teamwork. And this is what I kind of got, pulled into multifamily, is because it's a teamwork. And I started about a year and a half ago. So that's when my journey started with Grant Cardone's Summit. And then I went ahead. I see Tom there. Hey, Tom. With Summit, and I went ahead now and started with Brad Sumrock. So, it's a journey. I was telling Tom and Jonny was, about a year and a half ago, I did not even know what a cap rate was. Okay. So, I mean, and I feel like a lot of you guys who are starting off, I mean, you guys have no idea what's going on, how syndication works, how this whole thing works. So the first thing that I did was I went ahead and invested in myself. And that's what I did. Education, learning the game and surrounding myself with people and knowing the game inside out. I mean, that's the only way you're going to learn how to do this multifamily business. And Tom here, that's where I met him at the 10X group. And Jonny here, we met at the Facebook group, and we just hit it off. And there are many other dentists that we have in the group that are doing syndications. So I just wanted to give a shout out to all those guys, because we are all like trying to do like what everybody needs to do, right, Jonny?
Yes, sir. Absolutely.
So yeah, so multifamily is my passion, it's my dream, and this is what I'm trying to do here. And by the way, guys, I just got signed up as my first co-GP deal in San Antonio, Texas. Yeah, I'm loving it. And that deal is a crazy deal. It's 150 units, and
nice.
It's been a roller coaster. So I love it.
Nice, very nice. And we want to introduce the other guy here, Mr. Thomas. Thomas, tell us a little bit about yourself and how you got started in the multifamily real estate investing arena.
Hey, can you guys hear me? Okay, I had some challenges here on the technical front.
Hey, we hear you loud and clear, Tom. Let's go.
All right, guys. Hey, so thank you. It's an awesome opportunity. Awesome to do this live. It's really exciting to share what we have learned so far, and I'm so excited to come live with you both. Really, what I've been doing is I'm a serial entrepreneur. I own about 3 businesses. In the past years, and in the past couple of years, I got into real estate, specifically multifamily commercial real estate, where we invest in apartments. And so far, as of today, I'm invested in about 1,000 units as an LP, close to 1,000 and about 106 as a GP. So it's been a great ride. And I met Noel at one of those events, and we hit it off immediately. And he's an amazing guy and very down to earth, humble guy. And then come to know about it, I found out that one of his locations was right next door to where I live in Chicago,
Schaumburg, right?
In Schaumburg, yeah.
Yeah.
And then we traded different ideas and things like that. And then he wanted to always help the dentists in this community. And he's always had this I want to help others mindset. So he wanted to help other people. So this is the main reason why we would put the group together. And he's the brains behind it. He's always wanting to share the information of what we learn, and that's the whole purpose. And I'm so excited to be part of the journey with also Dr. Jonny. I mean, he's doing some amazing things with investing in multifamily, and is way ahead of everybody. So excited to share what we know, as well as learn as well.
Very good, very good, excellent. All right, so now the next thing we want to talk about is why multifamily real estate, right? There's so many different ways to invest money, right? There's stock market, there's cryptocurrency, there's real estate, there's flipping houses, right? There's, all different, you're buying commodities, bonds. I mean, why multifamily real estate? What is so good about this specifically versus, say, even a single family house? Like, what makes multifamily real estate such a compelling investment? That's what we kind of want to talk about next. Like, Thomas has invested in other types of real estate before. I've invested in all different types of real estate, but somehow we've arrived at this thesis that this particular vertical or sector is such a great tool, great investment. What makes it such a great investment? Maybe we could talk. Maybe we can start with you, Noel. Like, why multifamily real estate?
Jonny, we were talking about it last time. It's the 3 basic needs that we always want to make sure that we fulfill, in our own lives, right? So it's food, shelter, and water, right? And then multifamily, what does it do? It actually, satisfy the shelter portion, and it's if you go back in 2007, 8, 9, 10, the whole gamut of where everybody was like saying like, oh, real estate went down, went downhill, everything was liquidated. If you see like anything with multifamily, like anything with 32 units and up, nobody suffered. Okay. And it's only the single family homes that single family rentals that went down. It was because of over leverage and getting all these loans out there, which a lot of people couldn't afford. That was the majority of the burnout where it happened. But multifamily, I mean, it never hit the heat. And which is why if you see like all these big guys, the institution deals that's going on, like BlackRock, KKR, these guys are heavily involved in multifamily. It's because the investment is so great. I feel like with multifamily, what you can do is our biggest asset against, I would say, leverage against inflation and the rising rates is that sure, the NOI, we have control over it. Right. I mean, the cap rates and NOI, unlike, like some of the other real estate investments, especially retails. I mean, your yearly, increases is locked in the leases. So there are pros and cons, but, for me, I think the multifamily deal, it's amazing that, if you get the right location, the right market, the right, area where it's like sub-market, the right area where there's job growth, population growth. I mean, there's no way you can actually burn it down unless somebody nuked it.
Right.
That's my
So
opinion.
if I got you correct, if I heard you correctly, I mean, you like it. Number one, it's been used. It's a strategy that's tried and true, and it's been used by the wealthiest families and institutions. Right. The wealthiest. If you want to be wealthy, you should invest like wealthy people do. Right. So if you're saying wealthy people it's wealthy families, institutions, they invest in multifamily real estate. Why? Because there's stability, right? You said that there's a constant demand for the product that we are giving, right?
Yeah. So Jonny, so think about like, for example, Texas, a lot of migration going on, right? So what do you think? Like a lot of guys from New York, California, they're going to go to Texas. They're not going to buy a house. When they go down there, the first thing they'll do is they'll go rent. They'll go maybe rent for a year or two, and then they'll, figure out what's going on. And even right now with the rates going up, I mean, what are we looking at? Everybody is still in rentals because the house market is crazy. And there's not enough houses out there. Right. So with that being said, I mean, I feel like, multifamily is a safe bet.
Yeah.
I mean, what do you think, Tom?
So yeah, I mean, those are some great, amazing points that you said. Like some of these big institutions, right? Blackstone, BlackRock, all these guys, those are the top owners of multifamily, right? So when it comes to multifamily, so think about it. Why are they going after that asset class? Simply because, like what Jonny and Noel saying, is that it's a wealth builder. It's a generational wealth thing where you can accumulate and it keeps on going up. And then you refinance it, all those things, right? Here's a couple of things too. When it comes to real estate investing, right? Most of the time when you talk to people about real estate, they think about, man, I'm going to go buy a couple more houses, rent it out, right? And what happens is when you start buying houses, single family homes, you got to manage it. And it's not in the same location, right? It'll be in different locations depending upon where you purchased it. So guess what? You will be getting calls at night to fix the toilets. I mean, this broke and my pipe broke and all this stuff. And it would turn into quickly a second job, which high net worth and high earning individuals like dentists and doctors and medical professionals, that's not, they should be focusing their attention on, right? So that's the downside with single family investing. Property management becomes a challenge because the properties are spread out in different areas. But when it comes to multifamily, so think about it. In single family, if your tenant leaves, one tenant, one single family house, one person leaves, it's 100% occupancy. When you go buy, let's say, a 100-unit building, and one or two tenants leave, you're still at 98% occupancy. Easier to manage because it's all in one single location. So you don't have to drive from one location. I mean, you won't even be doing that. You will hire a management company because there's enough cash flow coming in to hire a management company, right? Where a single family, you got to build it up a lot where you can actually hire a management company, but still that management expenses is going to be higher because the property management expense, because they got to drive around, collect the rents. This is one single location. If there's a handyman, he's going and fixing in that location, collecting the rents. It's all easy. So, and it's high in demand. You can offer amenities, stuff like that, right? So those are some of the things that people don't think about. When they think about real estate investing, all they think about is, how can I buy a couple more houses, which is a wrong strategy.
Yeah,
I still have to find somebody who went from multifamily to single family. What do you say, Jonny?
I've never met anybody. Not one. Definitely, a lot of people go the other way, right? They start with single family homes and go towards multifamily. I see Melvin. I think that Dr. Noel, that's I think one of your fellow BlackRock guys, and he says the same thing. And that's basically what you were saying, Thomas, is that there's better economies of scale, right? Versus single family homes, right? So. Yeah. It becomes the property has enough cash flow that you can afford to get professional third-party management, whereas a single-family homes, you don't have that scalability. So we discussed the human shelter, that multifamily real estate's always in demand. Noel talked about it being a great hedge against inflation. We talked about the scalability of it. Now, some of the main things that probably the most important ones is cash flows, wealth building, and tax advantages. I think we should talk a little bit about that. So in terms of why I love multifamily real estate and commercial real estate, is that it's a cash flow, it's a cash machine, right? When you're buying an apartment building, you're buying a business. You're buying a cash flowing business. So, and the thing is about this business is that it is not an intricate business. You are renovating units and charging market rents. When you can do that, you can produce. There's enough people that are trying to rent that property, minus the expenses, you're going to get cash flow. And cash flow is a wonderful thing. And a lot of these cash flow dollars are tax advantage dollars. So when we're getting cash flow from multifamily real estate, so when I get cash flow checks that come in from my investments, I know that I already earn a high income as a dentist. I don't want to add more income to my dent. I want to add income that's not taxable. That was number one. We can build a lot of cash flow without paying taxes, right? Number two is that you can build immense wealth in multifamily real estate. Billionaires, 100 millionaires, deca millionaires, and all these guys, they all can, a lot of them invest in multifamily real estate. If you look at 1/3 of NFL owners are heavy real estate, multifamily real estate owners, right? So it's an excellent way to get cash flow and build enormous wealth. It's wealth building machines. They're cash flow machines. And it's given at a highly tax advantaged way, right? On top of that, as Thomas mentioned, we can do this professionally management, which removes us from the day-to-day operations of it. It relinquishes us of the day-to-day operations and having to do the stuff ourselves, having to fix toilets, having to deal with tenants, and going to court to get evicting tenants, and dealing with termites. And most importantly, it takes away our time, right? So time is what we don't have as busy professionals. So now if we can get wealth building, we can get cash flows, we can get tax advantages, and we can do this without our active involvement, that is what made multifamily real estate so compelling to me. It's also compelling because it, as Noel said, the demand for housing, affordable housing in America, where we're in an affordable housing crisis, it never goes away. The demand for this commodity, shelter, is inelastic, right? It doesn't matter what happens in the economy, the need for housing never goes away because people need a place to live. And so in a risk mitigation basis, having low risk, so not only can you get all these great advantages of wealth and cash flow, but you can do it with low risk. When you're doing flipping houses, when you're doing single family homes, flipping houses, those have more inherent risk. It's market dependent strategy. Multifamily real estate can go, actually, let's talk a little bit about the recession resilience, I would like, Thomas, if you could talk a little bit about what makes multifamily. So now we have a potential recession looming. This makes me want to empty my bank account and dump everything into multifamily real estate. Does that make you, if I can go have my savings account, which is my investment dollars, if I have it at zero by December, January, I'll be happy. Because you know why? Because I'm in a very hedged, very safe, recession resilient investment. Why is it recession resilient, Thomas? What makes it recession resilient, and what makes it a great hedge against inflation? They're both about the same.
That's an amazing point that you brought about. Yeah, in this environment. So even before that, I wanted to touch on a couple of big heavyweights in Wall Street that actually a couple of days ago, I think yesterday, a day before, they said it wasn't either Bloomberg or it could be Fortune. He said real estate is going to take a hit, assets are going to take a hit, except multifamily. And I was like blown away that, and this is just one heavyweight. There's a couple others who said this. And I think one of the Blackstone guys said this too. Did you hear that? The Blackstone stopped buying, their company who buys single family homes stopped buying that. However, they're now pausing multifamily purchases because it is multifamily apartments can thrive in any recession. Because what's happening today in America is America is going to sooner or later become a renter's nation, where more people are going to be renting than buying homes. First of all, homes are gone out of control. People who are the first-time buyers have been totally priced out. And guess what's happening? They're saying, and now the interest rate has gone up. They're saying, I'm going to wait on the sidelines until this stabilizes. And guess what? Until then, I got to have a place to live. And the only place I'm going to live is in a nice place in a complex with amenities. And guess where that place is? And that's multifamily. And during this time, all these guys are waiting on the sidelines in a nice high-rise or a multifamily complex. Therefore, it is great for all the multifamily investors because you know what? As demand and supply, as supply goes down, we can always raise the rents. And we're not talking too much. Even if you raise $50 a unit. So here's the math, right? Even if you just simply raise $100 on a 32-unit building, you have immediately raised the value of the building by $500,000 just by increasing it by $100 a unit in a 32-unit building with a 5 to 6 cap rate. So this is why this is recession proof. I mean, if you put in a single family, the price may go down. You don't know if there's going to be a bottoming or flattening of the real estate prices in the single family. Whereas in multifamily, the way a multifamily building, this is why it's super recession proof. Multifamily is not priced based on comparables like home. Single family is based on my house value, is based on how many houses are selling in the neighborhood and the same criteria. But multifamily, not like that. It's how many units, what is the rent, and there is a thing called as NOI, net operating income. I don't want to get too technical, but if you can increase the net operating income, the value of the building always goes up, and that's why it's recession proof.
That's right. Excellent. To add on to what you're saying here in terms of recession proof, we just have to, and Frankie is hitting the nail on the head. If you look at the history of multifamily real estate, you just got to look back and say, okay, so how do you know that what we're saying is right? I'm basing it on history. You look at 2008, the great financial recession. 2008, stock market crashed, right? That was the great housing crash, the toxic subprime loans that sank the housing market. Right? Everything was down. There was mass foreclosures, bankruptcies, foreclosures, short sales, right? People were losing jobs. People were losing their homes. But did those people go and live in the street? Where did those people go and live? No, where did those people go and live? Just tell me. They went and live where they can go and get somewhere to live. They go to apartment buildings. They go to mobile home parks. right? So those type of verticals perform actually better in bad times because would-be home renters remain renters. As Thomas said, renters become renters. Millennials are renters. America is quickly becoming a renter nation. There's no question about it, right? Home prices are high, all that. So go back to the 70s, the worst recession in 50 years in this country. Stock market tanked. Multifamily real estate continued on double-digit returns.
See, which is why, Jonny, I
faster.
mean, if you bring up this point, this is a great point. And here's the thing. When multifamily in 2008, nobody talks about it. Nobody talked about like it did well. Everybody is talking about the loomy and the groomy and all that bad stuff that's happened, but nobody talked about like multifamily thrived. And the other part is, it's like you said. I mean, where else are these guys going to go, right? I mean, it's a no-brainer. Now, here's the thing with multifamily. It's a slow process. It's not like a stock market, boom, boom, like a Bitcoin, like a value is going up and down every single minute, every single hour, right? I mean, with multifamily, like Tom said in his video, you get rich, you get wealthy, surely, right?
Yeah, get rich. It's not get rich quick, but get rich for sure.
For sure.
Slow scheme.
Right.
That's the thing. Multifamily real estate is a get rich slow scheme, but it's a get rich for sure scheme.
For sure scheme. Absolutely. There's no speculation. I mean, it's none.
Yeah,
It's
absolutely.
none like how you said, with the housing, I mean, with the whole housing market and everything else. And all these guys talking about the 2008 crash, they're comparing the crash today to that. I mean, it's no comparison. It's a totally different ballgame today than what it was last time.
Absolutely.
So yeah.
So good. I mean, I think we've talked a lot about the benefits of multifamily real estate. I'll kind of summarize it, right? We talked about the human
Jonny,
shelter.
I think you got to touch on the tax. You just mentioned about it. You should probably touch on that. Yeah, the tax advantages of multifamily.
Yeah, let's talk about that.
Yeah.
Sure.
Noel, I think Noel, did you want to explain that? The tax advantages?
Yeah, so we are talking about depreciation, right? The cost segregation.
I mean, I think that just high level in general, right? I mean, there's many different tax advantages in multifamily real estate, but if we're touching on a couple, like cash flow, do we pay taxes on the cash flow? Do we pay taxes on gains on if we sell a multifamily real estate? Is there a way to avoid taxes? If we are like those type of things, right? Like,
let me give an example if you got a minute, right? So I'll give you an example of my real life LP deal that I have with with a couple of groups, and it's pretty simple. I invested a small amount, 50 grand. This was last year, and I'm gonna be getting like 2x the return. It's a 10x, it's a 10% pref, and very simple. I got the K1 in March with a negative depreciation of 38,500.
You made negative,
right? Negative. And with all the new guys who are listening to this, if you have no idea what it means, it's a loss on paper, all right? And now
how much did you actually put in your pocket?
Yeah, so I invested 50 grand and I got a negative 38,500. Now it's like, what do we do? And I called my GP guy, and I was like, hey, what do I do with this K1? Why is it negative 38.5? I mean, did you guys lose money? And they were like, no, we didn't lose money. This is your depreciation that you can offset your taxes. And then a light bulb went in my head, and I was like, duh, this is what it was. So anybody listening to this, guys, this is a great vehicle. I mean, to offset all that earnings that you're going to be getting in multifamily.
Noel, did you get any physical cash? Did you get checks from that investment?
Yes. So every quarter I'm getting the 10% pref. Mm-hmm. And by year 3 to year 5, when they exit or refi, I should my 50 grand with the cash flow included, I should be getting back my 50 plus another 50.
Wow.
Right.
Well,
and then
my question more so was, so now now for the year that you got a K1, the K1, for anyone that doesn't know, this is just a tax document that summarizes your investment, and it will flow through into your tax return.
Yes.
So my question to you is, now you got your K1 said you lost $38.50 for that year. Did you receive any cash flows that year in your pocket? Did you receive any cash flow?
So my deal, the deal they closed it back in November of last year. So my first check that came in was March of this year. So now the great part is my accountant told me that you can take your loss and you can put it year after year after year.
So so if I'm getting this right, you're getting cash in your pocket, but at the same time you're getting a negative on your tax.
Correct.
Incredible. Incredible.
So here's the thing, Johnny, you get return of your investment and return on your investment, right? So we get both. So I'm going to get my 50 grand back in cash flow, part of it. And the big chunk is going to come in when they refi or they sell. Now, the best part is on the gains on that 50 grand that I'll be getting back, guys, 38,500 is non-taxable. I mean, what else? I will literally be paying taxes on, what is it, 11,500 if I'm getting my math correctly done here.
All right.
Not the 39%, but that's going to be at a 17 or 18. What is the rate now, Johnny?
For what?
Capital gains. Capital gains.
I don't remember.
Right? I mean, whatever it is.
I got the point is taken, though. The point is taken.
So let me give you an example. Let me put this in perspective. Let's say somebody's earning $1 million, okay, a year, and when you go to file taxes with nothing, that's your income that's coming in, active income, you're probably in the top tax rate of, what is it, 39% or something, right?
39.5 or something like that, yeah.
Yeah, so let's say 37.5. So let's say 380,000 is you pay Uncle Sam, which means you're left with what? $620,000, right? Okay. So in this case, let's say if that same guy who's getting $1 million a year took 500,000, again, numbers, right? 500,000 and invested that in real estate, he's going to get a negative K1 of something like, 400,000 in the negative K1. So he takes it, gives it to CPA. Obviously, you got to check with your CPA and everything, but he takes that 400, gives it to his CPA. And when he files the taxes, guess what? He's only paying taxes for 600K and not the $1 million, because that 400K, that's it, whatever that negative K1 is eliminated from his income. And this is how all these billionaires, they make a lot of money, but at the end of the day, they pay zero taxes because they take depreciation. And now one other thing. So this is when you get the negative K1. Now, no one was talking about in the year 3, because the value of the building goes up, right? Let's say you bought the building for $10 million. Now it's 13 million in 3 years. You go to the bank and say, hey, now it's 13 million. Can you refinance this property? So the bank will be like, okay, sure. We can put the value of 12 million, give you guys 2 million back. So the 2 million comes back to all the investors, and that's zero. That's a non-taxable event because it's a loan. It's not income from the property. And you keep that money, and your property keeps on continuing to put cash flow. So it's so many
there's a lot of tax advantages. Yeah, absolutely. That was a great one. Yeah, for the all right, let's keep it moving here a little bit, guys. So we talked about kind of broad level, right? There's many advantages to multifamily real estate: cash flow, tax advantages, wealth building. It's another thing that we didn't mention, but it's a tangible asset, right? Everybody invest. If you have, people think that they have a diversified portfolio. I have ETF, I got 401k, I have IRA, and I have Robinhood. I bought some other stocks. I'm well diversified. To me, that's not well diversified. To me, because all of that is still invested in paper, right? It's still invested in the market. It's all market dependent, public market driven. Real estate, it's a tangible asset. It's not going anywhere. You can't, it's physically there. Nobody can pay. Stock market is numbers on the screen. To me, I'm an old school guy. I want something I can see and touch. I can see tenants living in the building. The lights is on in 7A, 7B, the lights are on, rented. Perfect. I know these guys are paying rent. I know I'm okay. So that's another, it's a tangible asset. And if you are into the stock market, you like stock, I'm not saying that there's not money to be made in stock market, but if you want true diversification, you need to have money parked in real estate. There's no question about it, right? So now let's talk about, now we talked about the advantages. Now let's talk a little bit about what is a multifamily real estate syndication. I'm sure a lot of the people that are watching this, they're like, okay, great. You guys told me all the great things about about how good multifamily real estate is, but so what? What does that mean to me? I would love to get invested, but I don't know anything about it. So that's where syndication comes into play. And so syndication, very simply put, is the pooling of capital to buy a large investment property that the individual couldn't afford themselves. So this is when you get into properties that are 10 million, 15 million, 30 million, 50 million, 100 million, 200 million and up. Very few individuals can afford to buy that type of property by themselves. And if you look in large multifamily real estate, it's a team game and there's many, many players. So syndication comes up with, hey, me, Thomas, and Noel, we can't afford to buy a $10 million building ourselves, but you know what? Together, and we're going to get a few more of our friends and we're going to all pool our capital. Now we have enough money to go and buy this building. So that's what a syndication is. A syndication is simply grouping of capital and buying a property, right? So in a syndication, there's two main players. There's a limited partner and a general partner. Noel, can you tell us a little bit about what the general partner does in a syndication?
Well, the general partner is the guys who are going to sponsor the deal. They're the ones who find the deal, write the deal. They have managers for the deal. They'll do the fundraising for the deal. They'll have to go ahead and get the loan for the deal. They'll have to sign their life off on the deal. Okay, so those are the guys who are actually on the hook. And all depends on the experience, their track record, how many of these cases have they done, how many deals they've closed, and who is the guy with the money. Okay, and the guy with the money is a guy who actually will sign up on the loan agreement, who will be, they will have to have a certain amount of net worth. So that's why the general partners are on the hook for a lot of things. The general partners, pretty much they are all they're the guys. They're the guys in the trenches. They're the guys who are actually getting it done. And for anybody starting off as a general partner, you definitely have to leverage time, resource, and people and money from other general partners who've actually already done it, like myself. So I'm the one. I just started. I started about a year and a half ago. So I'm a co-GP in a deal. What am I doing? I do not have the track record. Okay, I don't have the experience. So I am utilizing other guys who've been in this field, who's done this for decades, and I'm using their time and their track record and the experience. So these guys are the ones, the general partners are comprised of, that puts the deal together. They underwrite the deal and make sure the numbers are conservative, and they make sure that, the deal is going to perform. And these are the guys who actually have to win the deal from the brokers. So there's a lot that goes underneath, with what the GP has to do. Now, LP is a different story, so I'll let you elaborate a little bit on the LP.
I'm going to let Thomas talk a little bit about limited partner. So general partner, if I got you right, Noel, the general partner is the group or entity, whether it's one person or a team of people, that's the one that's going to actually do the work, right? They're going to find the deal. They're going to work with brokers to negotiate it. They're going to get the financing for the deal. They're going to manage the property. They're going to do all the heavy lifting, right? They're going to actually be the ones that do the physical work of buying, managing, and ultimately executing the business plan for the property, if that includes renovating units. And then eventually they're the ones that will be responsible for sale or disposition of the property, right? So that's what the general partner does, as they're basically the engine of the syndication, right? They're the ones that are going to actually do the physical work, right? So that leaves the other part of the syndication, which is the limited partner. So Thomas, tell us a little bit about what the limited partner is in a syndication, and and how
Yeah.
how the limited partner works in the whole
Yeah,
process.
exactly. So, yeah, like general partners do all the work, right? LPs just enjoy the cash flow. So LPs are in it they don't do any other work. They just enjoy the cash flow. They get passive returns. So before this, right? Before knowing about multifamily, I was always on the lookout for a good passive investment opportunity. Everybody wants passive returns. They just want to park the money somewhere and get the money. But the problem is, stock market, obviously, you can find some good dividend paying stocks and put the money in there. But then there's always fluctuations. It either, if it's a good dividend paying stock, it doesn't go up like that, right? It'll be like almost plateaued. It may go up a little bit, and it also may come down if the dividend goes up and all that. So I was always on the lookout, never found, and I came to the conclusion that there is really no such thing as passive investment where you can park the money and forget about it. But once I found multifamily, if you find a good sponsor, if you find a good GP team who can do all the work, then I found out that this is the true passive opportunity that we're talking about. I mean, it's not like 100% passive, maybe 99.9%, somewhere like that, where you don't have to do any work. You just get on some investor calls to see how the property is performing, go through the numbers when they reports, when they send you. And that's how I started. I started putting money as an LP, saw the money coming in every month, and I'm like, man, this is pretty good. So that's what the LPs do. They just join, they just pool the money, they just invest the money. The GPs take the money, bear all the responsibility, do all the legwork for you, and make sure the property performs because they're on the hook too. So that's what an LP limited partner is. They're just pool the money and enjoy the passive returns. Basically.
I got a point to add. Tom. It's like when you have your own money in the deal, that's number one. And number two is you are even more careful when you have other people's money.
Right.
Okay. And for me, this is a higher sense of responsibility to have other people's money. I tell my sister, because this deal that I'm in, I got my sister's money, and I was like, shoot, man, I'd rather, just have my own money, and I gotta have a family member's money.
You're not afraid to lose your own money. I'm not afraid to lose my own money.
Yeah. And that's why, I made sure I looked at the underwriting again when my sister called me, hey, I'll come in this deal that you're a co-GP, and I looked at the underwriting. I was like, let me get that underwriting out again. You know what? Now it's her. Now I have to deal with her every single day.
Because if you lose it, that'll make for a tough Thanksgiving dinner, isn't it?
Exactly, right? And I was like, sis, you know what? There is nothing such as no risk, but here's what it is. The numbers that I'm getting right here, you'll be just fine.
Right.
Yeah.
So good. I mean, so it looks like, limited partner, I mean, for my, and to add my 2 cents on the LP. So we talked about the general partner. They're the ones that bear the brunt and the responsibility of getting the job done. Now, the limited partner, the LP, all of us have invested as LPs as well. Mm-hmm. Now, limited partner, that means this is the capital arm of the syndication. This is an essential arm of the multifamily space. Multifamily real estate, if a sponsor or the general partner says, hey, I got this great deal and I can make X, Y, Z on this building, it's nothing more than a dream unless they have the capital to do it. Right? Yep. So the limited partner plays that essential role of bringing capital to the deal to let it make it happen. So that's what a limited partner does. In exchange for the limited partner bringing the capital, the general partner is going to go and do the work. And the limited partner is going to get a percentage of the price. So what happens though? Now, if a multifamily real estate deal, Thomas talked about a deal, you buy for 10 million and you sell it for 13 million. Now that 3 million of profit will now be split in a predetermined way between the limited partner and the general partner. So that's how the limited partner gets paid in the deal. Typically, a limited partner will get between 70 to 80 to 90% of all the profits of that deal. So out of 3 million, if we made a $3 million profit, $2.4 million of profit will go to the limited partner, and 600,000 would go to the general partner and the general partner gets paid for doing the sweat equity, for actually doing the work.
Yeah.
So that's kind of how the profit split works. We run a little bit long here now, so I want to get to some of the questions that are in the live. We are going to be doing this probably every 2 weeks, right, Noel? I think for live.
Yeah.
Monday,
I don't know. I don't know how do you guys want to answer those questions. You want to go like from the first one that we
I got them kind of listed out here.
Okay.
Let's see here. Okay, so we'll start with the question. Melvin made a nice comment. Frankie's been dropping gems all day in the chat. Peace and grace, love and light. Can you elaborate on investment of industrial and commercial real estate, and if the same opportunities to max finances while reducing similar liabilities? Anybody that's invested in retail and in multifamily or in industrial over the last few years have blown it out of the water. Industrial will continue. I'm one step removed from that. I'm very much into the multifamily real estate arena. Industrial does have very favorable tailwinds, and I'm sure that there's some good positives with retail as well. With recession and Amazon and all of this online stuff, I do believe that there is a very bright future for that. But again, that's not the vertical that I'm most interested in. So I can't go into a lot of.
I want to add to that. Tom, they just closed an industrial in Georgia, Savannah, and it works pretty much the same way as multifamily. It's unlike retail. Tom, you want to elaborate a little bit more, like what made you guys buy the deal and how you guys increasing the NOI and how does it compare to multifamily?
Let's keep it a little bit, keep it brief on this one because we're trying to keep it to the multifamily and we got to try to wrap
basically
it up
we are focused on multifamily, but we came across this industrial storage deal where people can store things, but at the same time can have an office too. So what was attractive is that obviously the area was top notch and the place was good, and then there is less maintenance and less expenses compared to multifamily. And we figured out that you can simply increase $100, $200 every year, and the evictions are easy. You don't need to go to court to evict them. It's a contract you can terminate. So there are some advantages and disadvantages to both of these, but both are cash cows at the end of the day. We are making a ton of money in that industrial storage deal. So
it's great. It's a good. I love that. I love that too. I love that vector too. That vertical as well. All right. So now the next question is, hold on. Okay. So Melvin's asking, so Noel, this question's to you. As your role as a co-GP, what is your function on the team? And typically, how large is the GP team?
Okay, great question. My particular function is investor relations. Now, if you saw one of my posts that I had there, I had like a whole bunch of, outlined by one of the some rockers that they outline what is the role of a GP. So every GP has its own role. So, the biggest role that I think like the first person who has that role is finding the deal and underwriting the deal. So in this deal, what happens is everybody underwrites it. Everybody has to know about the deal. Everybody has to walk the property. But it's just that some of us are a little bit more sharper in numbers, in spreadsheets. Some of us are a little bit more sharper in networking. Some of us are a little bit more sharper in asset management and running the business. So my personally, I'm investor relations, but my thing after close will be to also assist with asset management, to make sure how the business is run, because after all, multifamily is a business. And with my business background, that is going to be a huge plus to these guys to come in and make sure the vacancy is to a limited, advertisement, getting the staff on board, getting teamwork, getting culture, getting all this stuff done, just as if I'm running my own dental practices.
So, and how big is that GP team, Noel? How many people are in?
There are 4 lead teams, and they are comprised of MDs and DDS, just like us. Those guys have been on the team since 2005, and they're all with Brad Sumrock's team. 2 of the main guys, they've done at least 9 to 10 deals. Nice. There's a retired dentist on the deal. He's also a great asset. He's been with Sumrock for about 3.5 years, and he has about 4 deals under his belt. So with all that adding up, all that experience, it's quite a bit.
How many people do you think total? Is it you said 4 groups?
Total we are about 7 people.
7 people in the GP.
Seven people.
Very good. Excellent. And
So
you,
I'm the
yeah.
most junior co-GP, and as you guys can see, I'm telling you, like, up front, I'm leveraging these guys. Okay.
Yeah, I mean, Noel is a little modest as well. I mean, he brings a lot of business savvy from his dental business that translates very well horizontally to another vertical. So now let's talk. Next question: Can Lisa Craven, can a syndication do a 1031 exchange? If not, what are your Lisa? Yes, the answer is yes. It's a little bit difficult. We talked about this before. I'm going to keep it real brief for this thing, but the short answer to is, with a like investment, you can do a 1031 into another like investment. So a syndication, proceeds and profits from a syndication can be 1031 exchange into another syndication. Yes, the GP or the sponsor has to be set up for it. There's certain paperwork and certain things that need to be done. Not every deal will be able to accommodate that. So that's something that you should look into before you try to do a 1031 into a syndication. You have to make sure that that general partner is set up for that. Next question. I like the idea of syndication. Is a particular license required in order to invest in multifamily properties? Thomas, is a CVV Entertainment wants to know, is a particular license required in order to invest in multifamily properties?
No, there's no license required to invest in multifamily investments. So
thank you.
Yeah. The only thing is some investments you have to be accredited investors, which means you have to be an accredited investor. You can look it up what that means. So basically.
Absolutely. Correct. Yeah. Okay. And finally, I think this is the last question here. Do the general partners charge a fee for all the work and time they put in? I think we discussed that. So basically the general partner will get a percentage of the profits. So they only get money. The general partner will only get paid if the deal is profitable. So once the deal is done, the profits will be split in a predetermined ratio. Say, for example, 70-30, where 70% of profits would go to the limited partners and 30% would go to the general partner for the work that they're doing. So the work that they're put in, and they get a 30% split of the profit, for example. So that's how they get compensated for actually doing the work.
So I'll give a quick example on this before we go. It's like, if I am on a GP team and I have 7 people, so those 7 people, we will take that 30% and then we'll break it up into those 7 people. And what we'll do is, whoever is the main guy, they will get the chunk, and then the little guys like myself may get like the crumbs. Okay. So that's how
remember, Noel is a very rich guy, so thousands of dollars is crumbs to him. You have to remember that.
Yeah. So I'm gonna get the crumbs. I'm gonna get the breadcrumbs. Yeah.
All right, guys. Look, I thoroughly enjoyed this. I think that you guys, Thomas, Noel, I think this was very informative. We're not getting paid for this, right? No, we don't get even crumbs. We don't get paid. We don't even get crumbs for this. But
we're not selling anything.
We're not. Yeah. This is not for sale. No, this is the good. Yeah,
we're not selling anything.
This is strictly this Facebook. We want to make this Facebook group
educational,
informational, right? So this is the group where you can come and get all information. And this live is designed for any questions. So anything that you want to learn about, want us to cover, let us know in the comments. This is going to be an interactive group, just like we did here with the chat. I love it. If you guys have a deal, even maybe an offering, and want us to take a look at it and give us your input before you make an investment, more than happy to do that. This is, like I said, this is for us all collectively to become better investors, so that we can build wealth together. And
to let everybody know there's other opportunities rather than putting the money into the stock market.
There's a big world outside of the public markets, guys. Private offerings, learn about them, take advantage of them, accelerate your wealth, and accelerate your cash flows. That's the only way to freedom.